Hello! This video is about how our inventory is tracked and how our inventory moves around between accounts from inputs to finished goods, and then how inventory becomes cost of sales and revenue. The first place we start is in QuickBooks, and I'm going to show you where in QuickBooks you can see the values of our inventory. The balance sheet is the place. So as soon as we get in here, we go direct to reports and balance sheets. Depending how you have QuickBooks set up, your screen might not look the same, but you should be able to find the balance sheet on the current day. So our balance sheet shows how much money we have in our bank account, which is never enough, right, Joseph? And then it shows the value of all the equipment and all the inventory that we have. So specifically for what I'm going to show you, I want you to look at here. Under inventory assets, we have our inputs for cheese, which are currently valued at $20,494.88. And these are labels, containers, boxes, all that kind of thing. And then we have our finished goods for cheese, currently valued at $38,809.89. This is the pails of feta, the containers of feta that are done, the containers of ricotta, all the stuff that's in refrigeration and ready to sell. So those two numbers are going to change throughout these examples. So for the examples, I've showing how this works, I've made some inventory items. So now I've jumped over to SOS and I'm under inventory items. And my super funny example is that we're going to make cheese from mouse milk. We're going to make mouse cheese. Yes, I know. It's craziness. So I've made a couple of items. So I'm just waiting for this to come up. And then I'm going to search for my mouse items. So we got the mouse milk and the mouse cheese container. So if we look inside the mouse cheese container, these are 1 milliliter mouse cheese containers. And these are of type inventory. Non-inventory are things we don't track how many we have of, or the quantity, which is most of the stuff we use in manufacturing is inventory type. And then there's 3 main accounts that determine what happens with these things. Now, because this is a cheese container, we'll probably never sell it directly, but if you were to invoice it, the revenue would go to cheese sales. The big one here is, where is the value of these assets stored when we buy the stuff? And it goes into the inputs for cheese. And then the other thing that is also not used that much would be the cost of goods account. These are more important for finished goods. With our inputs like this, the main thing is what asset account are they stored in. So for the mouse cheese container, the value of those starts in the inputs for cheese account. If we buy $10 worth of containers, that $10 goes into the inputs for cheese account. We have these categories we use, and this cheese is for finished cheese. Critical production input is for like yolks and cream, and expensive high quantity ones, and then regular production inputs, which this would be, is the category that this falls in. So this is all set up. These are the containers for our mouse cheese. Now we have mouse milk, which is the milk that we're going to turn into cheese. So this is mouse milk in milliliters. It's an inventory type, meaning we track it quantity-wise. The category is production input. The income account and cost of goods account, not a big deal because we don't sell or ship these things. And the big thing here is that when we buy mouse milk, it's going to go into the inputs for cheese account. So this is all set up. So we need to make one more thing to make this whole example work. And this is mouse cheese. This is going to be the finished 1 milliliter container. We track inventory. The category is cheese. It's finished goods. Now this is more important down here, where when we sell these things, the revenue is going to go to cheese sales. When we manufacture this, it doesn't go to inputs, but it becomes finished goods of cheese. And when we ship it, the expense is going to go to cheese cost of sales, because the expense is its packaging, its milk, it's all of that goes into this. So it's going to get expensed to cheese cost of sales. It's inventory, it's category cheese, so we're ready to go here. Okay, so now I'm going to purchase the stuff that we need. So purchasing, I'm going to go to purchase order. I'm going to create a new purchase order. The vendor will be Daryl. Let's see, what do we got? It'll be Daham. We're buying the stuff from Daham. He's now a very powerful supplier of most cheese products. So we're going to buy the most milk per milliliter, and we're going to buy 100 milliliters at 1 cent, and we're going to buy the containers. We get 100% yield with most milk, by the way. It's really good that way. I know I'm an expert in most cheese maker myself, so, and it is also 1 cent per milliliter. So now we're going to close this. Now we've made a purchase order from Daham. Now we're going to receive those items. So we got it all. He supplied it. He's an excellent mouse milk supply person. So we've received the stuff. Okay, so we received the mouse milk inputs into inventory with their value. We did that in SOS and I synced, and now I'm over in QuickBooks. So I'm now looking at the inputs for cheese account, and the value has changed a little bit, and that is because we've added this stuff. Plus, there was some other posting to QuickBooks since I started this video, so the numbers changed a bit. I'm changing the filter here just to today, and then it's easy to see what happened in this account. So now you can see there was an automatic posting that happened, which isn't related to what we're doing, but we received $1 worth of 1 milliliter cheese containers and $1 worth of mouse milk, and you can see that our inventory value of what we have has gone up by $2 for those two things, and it's reflected back here on the balance sheet. This number has gone up for the inputs for cheese. Now we want to manufacture this, and when that happens, that $2 should move from the inputs for cheese to the finished goods for cheese account. So let's do that. Okay, so we're back. We're going to do some manufacturing. So we go to production, processes. We're going to do a new production. So we got our outputs and our inputs, and the inputs to the process is going to be the most cheese container and the most milk. We have 100 on hand. We're going to use it all. We're going to make one big, huge batch, 100 milliliters with 100% yield, no enzymes. You spit in this and it turns into cheese at 100% yield. It's absolutely amazing. I think we should do mouse milk. So here's the inputs. The output is going to be mouse milk in the 1 milliliter container, and it's going to make 100 of those. And that's it. We're going to manufacture this now. So now the processing is done. The process is done. I'm back here, mouse milk demo process, and I'm going to sync. Okay, so we're back. Now what I said was going to happen was if we manufacture mouse milk that the inputs, the value of the inputs that we have in inventory should go down by the $2 for the containers and the cheese, and that's exactly what's happened. Here's that journal entry from SOS for the manufacturing process. It took out of our inputs the dollar value of each of those two items and brought down the value of that. And if we go back to the balance sheet and we look at finished goods for cheese, you can see that we've added $2. So $2 of cheese is now ready to sell. So we're moving now. Once things are set up, things move fast, and that's the beauty of having systems like this. So now we're going to sell that cheese. So I'm going to go do a sales order. Well, if we're going to ship it first, then we're going to sell it. It's a two-stage process, right? Customer is Daryl. Daryl Stewart loves mouse cheese. The guy can't buy enough. We should charge him more. So we're going to charge this guy a lot too. So we're going to sell him the mouse cheese. We're going to sell him all of this. The guy can't get enough. And we are going to charge him 2 cents. We're going to double our money on this. Can you believe that? We're going to charge him 2 cents per container. Wait, that's not doubling our money. Because the container is a cent and the cheese and the milk is a cent. We got to do that. There we go. Ho, ho. Okay, so this is good. This is what he's ordered. He's ordering for 4 cents per container. So we're going to close that now. So there's the Daryl Stewart. Now we're going to ship. We're going to ship the product, and then we'll go see what happens in QuickBooks. So that's done. Now we're going to sync. Okay, so here we are. We're back in QuickBooks after syncing, and everything has happened. So if we go into our finished goods for cheese, you can see that there's the $2 that went in when we manufactured it, and now the $2 has come out when we shipped it. And now I've switched over to the income statement. So quickly, that's what happened there. And now I'm looking, since we shipped the cheese, we want to look under our cost of goods for cheese. And there it is. So what's happened so far, we shipped it, so now it's now expensed the $2. It's no longer an asset. It's now become an expense for cost of goods. And the final thing is just what happens when we invoice. So here we are back in SOS, and so far we've shipped our mouse cheese, and now we're going to create an invoice. Not Daryl Stewart is willing to pay $4 for the cheese. That's crazy. So let's save that. That's our invoice. So now we've invoiced, and we're going to sync. Okay, so we've synced. Now I'm back into the P&L report, the profit and loss report. I'm going down into wholesale sales cheese, and there it is. Daryl Stewart bought $4 worth of mouse cheese, and it's all flowed the way it's supposed to. Okay, this is one final cool thing. Now that back in SOS, now that we've done everything properly, I can go to profit and loss by customer report in SOS, search for Daryl, and filter for today, display the report, and there you can see it. Revenue $4, cost of goods $2, profit $2. That's a 50% profit. System works great. Love it.